Assalamualaikum warahmatullah. I'm going to explain to you about the short-term decision making. The next topic is add or delete, also known as skip or drop, or discontinuing a segment or an operation. Okay, what is it about? Sometimes a manager may find that a certain segment of the business is losing money. So, for example, you have either a product range A, B, and C, or a segment of your business A, segment B, or segment C. Okay, you will see that A is making profit, B is also making profit, while C is making losses. So, what's your decision? So, the first reaction, you will say that, oh, I want to continue with product A, I want to continue with product B, but I want to shut down C. Okay, so you want to delete, or you want to drop, or you want to discontinue product C or segment C. Okay, in that case, so you want to make a decision. So when a manager is deciding to add or drop a product line, he or she should consider incremental revenues and costs relating to the change in the operation. So you look at the incremental cost and the incremental revenue, and also look at the fixed expenses. So the incremental costs for this decision often include a portion of the firm's fixed expenses. So some companies' fixed expenses are relevant when product lines are added or dropped. So the relevant portion is that which must be added if a product line is added, or can be dropped if a product line is dropped. Okay, as usual, there are various factors that you need to consider when you make a decision, add or delete a segment or a product. What about the interest and welfare of your employees if you drop or if you delete a certain product line? What about losing established customers to the competitors? Is there any special problem of industries, for example? What will happen to your unused plant and machineries? Okay, if you add the expertise or technical knowledge, do you have it? The acceptance of the product by the customers, the availability of resources, do you have enough materials, labor, plant and machinery to proceed with your product? So these are some of the considerations that you need to take into account. Okay, there are also some other factors. Okay, take for example, company Sweetheart Enterprise is a bakery that produces 3 types of products. So the following information relates to the currently ended accounting period. So you have 3 product lines: bread, cake, and cookies. You have been given the sales information and the total cost. And from here you see for example, bread, the sales is 40,000. The cost is 28,000. That gives you a net profit of 12,000. And for cake, you see the cake is making a profit of 20,000, and cookies making loss of 6,000. So you might decide that you want to discontinue cookies. Okay, you want to discontinue cookies. Why? Because cookies are making losses. Given that the total fixed cost amounts to 30,000, and that 30,000 is apportioned equally to the product range. So what is it that you need to do? You need to advise Sweetheart Enterprise whether the cookies should be dropped or not. Okay. When you want to make this decision, you need to prepare the income statement based on the marginal costing approach. Okay. What is marginal costing approach? You will divide the cost into the fixed element and the variable cost portion. Then you look at the contribution. That means you look at the difference between your fixed cost and your variable cost. So the difference will give you a contribution. Why you look at the contribution? Because in the short run, we assume that the fixed cost is constant. So when the fixed cost is constant, that it won't be affected by any alternatives that you choose. Therefore, the fixed cost is considered as irrelevant cost. So you only consider the relevant cost. Okay, this is the income statement. So this is the income statement. You see that you split the cost into variable portion and the fixed portion. Okay, sales minus your variable cost, that is 18,000, gives you your contribution of 22,000, less your fixed cost, 10, gives you a net profit of 12,000 ringgit. Where do you get this? Where do you get the variable cost? So if you see in the question, okay, in the question you have the total cost of 28,000. The total cost is 28,000 and the total fixed cost is 30,000, and that is apportioned equally to your three products. So 30,000 divided by 3, you will get 10,000. So bread will take 10,000 of your fixed cost. So 28,000 minus 10,000 gives you 18,000. So you will have here 18,000 as your variable cost. So variable cost is 18,000. So 40 minus 18 gives you 22. So that 22 is the contribution. Next, less your fixed cost 10,000 gives you a net profit of 12,000. So you do the same thing for cake and cookies. Okay, you will get 30,000 and as the contribution, and your net profit for cake is 20,000, and for cookies your net profit is 6,000. So the profit remains the same as before. Okay, 12,020 and negative 6. So here you also have 12,020 and negative 6. So the total is 26,000. Now, what do you want to do? If you drop cookies because you found that cookies are making losses, so you want to drop this product line. So if let's say you drop this, what is the implication on your profit? Okay, if you drop this because you say this is making losses, so I want to just concentrate on my profit, profitable product range. So I want to concentrate on bread and cake only. So look at the implication on your profit. So now you drop that. So again, 40 minus 18, you've got 22. But what about the fixed cost? So fixed cost, your total fixed cost is 30,000. That 30,000 now has to be shared equally by bread and cake. So instead of 10,000 each, so bread and cake have to take a portion of bread has to take 15,000. The same goes to cake, another 15,000. So with that, you will get a profit for bread 7,000 and for cake 15,000. So total of your profit now becomes 22,000. So what's the implication of the profit? So you look at the profit comparison, the old net profit, that means with the cookies, you produce your cookies, so the net profit is 26,000. But with the new profit, that means if you now delete or drop cookies, the profit will only be 22,000. Okay, here you see. Before, if you do not drop, that means you continue with cookie, you will have a profit of 26,000. Here, if you drop that product, your profit will become 22. Why? Because the share of the fixed portion, the 10,000 borne by cookies just now, has to be shared equally by bread. That means the 10,000 spread equally. 5,000 is given to bread and another 5 is given to cake. So in total, bread has to take 15 and cake has to take 15. So you can see there will be a net decrease in your profit by 4,000. Okay, so what's your decision? So your decision should be based on as long as the product gives a positive contribution. So bear in mind, you are looking at the contribution. Okay, you are looking at the contribution and not the profit. So long as the product gives a positive contribution, why? Because that contribution will contribute to cover your fixed cost, and if there were to be any extra of that, that will be used to contribute to your profit. Okay. So the company should not discontinue or should not delete or should not drop cookies. Why? Because the net profit of the company will decrease by 4,000 ringgit. Or you can say that the company should continue producing cookies because it increases the company's profit by 4,000. So the decision is do not drop cookies. Okay. So that's all for add or drop. So remember, your decision should be based on the contribution. If it provide a positive contribution, then you continue with the product even if the product is making losses. So with that, I thank you.